You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program here on the old Options Insider Radio Network, where we dive deep into everything going on the crypto side of the fence. We'll talk the spot, the futures, the options, of course, the volume, the volatility, the SKEW, all that good stuff, and a whole lot more. My name is Mark Longo from the aforementioned network, as well as, of course, from the Options Insider.com. Reminding you, if you like what you hear for this program, for everything we do on the network, come at you pretty much a couple of times a day here on the network. Leave those reviews on your platform of choice, wherever you get our content. This has been a tumultuous year. A lot of people are out there looking for where to hang their hat in terms of reliable financial information. We're happy to provide that. We've been doing it now for well over a decade. So keep those reviews coming so new folks can continue to discover the network in these trying times, particularly for you new crypto folks. A lot of you are nascent, shall we say, in the option space. We have a lot of great content to help get you up to speed so you can understand some of these terms maybe you're not that familiar with or throwing around, like SKEW and open interest and all this other fun stuff. You can learn a lot about that and a lot more over there, wherever you find this content. And, of course, keep those questions coming, too. We do love to hear from you guys. And let's see who we're going to hear from today on the old program. It is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up on the Crypto Hot Seat is a newcomer to the program and indeed to the network. He is Tom CHIPPAS, the CEO over there at ERISX. Tom, welcome to the Crypto Rundown program.
Thanks, Mark.
Looks like we are due for our regularly scheduled approximately 6-month check-in with ERISX. We had you guys back on in the, now seems so distant days of January when we had Matt Trudeau, your chief strategy officer, on. Then we checked in with you guys again around June when we had Ian Greaves, your head of product, on. And now we're wrapping up the year with you, Tom. So as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the financial space, as well as how you found your way to becoming the CEO at ERISX.
Sure, Mark. Thanks. And thanks for having ERISX on again. Really appreciate it. The short version of my history, spent a little bit of time early in my career working at firms that nowadays you would call fintech companies. Back then, they were just small software companies. And then really spent close to 20 years running various electronic trading businesses on Wall Street at firms like Deutsche Bank and Barclays and Citi across equities, options, and futures. And then made a move later on in my career and spent some time in the blockchain space. I was in the blockchain space first before crypto, but kept getting deeper and deeper in and wanted to get into crypto the more I learned. And when the opportunity to come and build something really unique like we've done here at ERISX come up, I jumped at it. So really thrilled to be here, and we're over 2 years old now, and really proud of all we built with our spot in futures market. So really an electronic trading and market structure guy who found his way to crypto and is trying to bridge those two worlds.
Doesn't sound like you guys have been around for 2 years, but I guess time does fly in a pandemic, Tom.
It does. Well, a lot of the time for a firm like us, of course, spent up front doing everything from raising financing to acquiring licenses and building technology. So maybe not the public face for that amount of time, but that actually is how long ERISX has been around, just over 2 years.
That's still hard for me to wrap my head around. But of course, I mentioned we've had a couple of check-ins with you guys. But this has been a crazy, unprecedented year. Tom, we've had an explosion of new listeners just for this program, even since your last appearance in June. So there may be a whole rash of new listeners out there who maybe aren't familiar with ERISX. So maybe let's start there. Give them your quick 30-second elevator pitch on what the heck it is you guys do over there at ERISX. And as I mentioned earlier, it's obviously been a very tumultuous year, an unprecedented year, and just about every way, shape, and form, not the least of which the last month or so where crypto volatility has been just off the charts. So walk us through what this past year has really been like for you guys, kind of a new startup crypto derivatives exchange having to weather this most unprecedented of years, Tom.
For sure. So very quickly, ERISX is both a spot exchange as well as a futures exchange and derivatives clearinghouse. So in comparison to names that your listeners may be familiar with, we are a spot exchange. So if you're trading on Coinbase or Kraken or Gemini or Bitstamp, we are a spot exchange just as those firms are, focused on crypto commodities. And we are also, however, different than all those firms I named, a derivatives exchange. So we have what's called a DCM license from the CFTC that lets us operate a futures exchange. But we also have a clearinghouse license, which is called the DCO, and we operate both the exchange and the clearinghouse for derivatives. So really under one roof, you can trade both the spot as well as the derivatives on our platform.
And walk us through what this roller coaster of a year has been like. We came into the year, seemed like it might be a quiet year. Of course, everyone was planning for the end of the year to be a little bit crazier with the election, but we were hoping for maybe a little bit of a quieter start to the year. The year got off to a rocking start even in January. And of course, we all know what happened in February and March and beyond. So walk us through the tale of tape of the past year here at ERISX, Tom, as you guys are newer additions to the marketplace having to ride and surf these very high market waves, sir.
Yeah, for sure. It has been a lot of wave surfing going on this year. So really for us, as both a spot and derivatives exchange, we've tried to roll out products that people would want to trade. And on the spot side, certainly there's lots of choice, but we focused on what we believe is really critical, which is a central limit order book that offers connectivity into our market directly for all comers. So whether you're an individual or you're an institution, you're trading on a central limit order book as opposed to via over-the-counter trading desks. And the benefit of that is you're getting the best price. If you're the best bid or best offer, you are going to be trading at that best possible price, as opposed to trading over-the-counter where the quotes and bids and offers that you may see are differentiated by who you are. So we like to think that we're bringing more transparency, better pricing and access to retail as well as institutional by applying that central limit order book methodology that has allowed for such meteoric growth in equities, options, and futures. We want that in crypto. On the derivative side, you're speaking about volatility. There certainly has been quite a bit of it. And when you speak about crypto derivatives, it tends to fall into two camps. One is the non-U.S. or offshore, I'll say, but offshore, of course, is relative to whose shore you're on, but non-U.S. markets that offer substantial amounts of leverage in crypto derivatives. Those have seen massive growth. And then, of course, you've seen good growth here in the U.S. With some of the products listed at places like CME, which are a large contract, 5 coins, very expensive to trade, maybe not always friendly to the retail trader. So our Bitcoin and Ether physically delivered futures are 1/10 of a Bitcoin. And on the newest product that we've just launched, which is really focused on letting people capture some of that volatility, is called a bounded future. And that bounded future is also reasonably sized in favor of the retail trader. And to that end, it's also 1/10 of the Bitcoin or one Ether if you're trading ETH. And what the bounded future is as opposed to our previous products of Bitcoin and Ether physically delivered futures, bounded is a cash settled product. And what that means is you can enter into a short position with cash. You don't necessarily have to have the coin to do that. And it has both a cap and a floor. And we think that these attributes, being able to short with cash and having a floor, lets people that maybe are new, and you said you have a lot of new listeners, maybe people that are new to these markets and want to trade around the volatility, it lets them do that in a way that is both collateral efficient, but a bit safer. It has a safety net, as it were, and that it has a floor, so you're not going to get wrecked as you do on some of those offshore markets where you could end up going to zero. So we've tried to listen and look at the markets and listen to customers and build products that we think people want for these times. And we think the bounded product is something that is super relevant when we do have high volatility, as you mentioned.
That bounded future is certainly a fascinating product because we've heard this pretty much since the futures were launched over there at CME and SIBO way back. Oh, the dark days of 3 years ago now. How much longer that seems, particularly this past year. But yeah, looking back at that, one of the most common refrains the last time Bitcoin was threatening 20,000 was, man, this thing might be a little top heavy here. I would certainly buy a put on it if it were available, but I sure as hell am not going to short the future because it scared the hell out of just about everybody. And so it seems like, Tom, you guys have come up with a product that kind of splits the difference there, allows them to actually come in and short it without actually potentially betting the farm at the same time, sir.
Yeah, that's right. So, if I look at our markets today, we have our Bitcoin bounded future with a $25,000 cap and a $12,000 lower limit. And that's printing right now, right around the spot prices. The last print was at 19,023. Current spot market is 19,086. So actually a little bit of SKEW in there. But it's a new product. It's just coming up to speed. New participants trading that product, but it's a way for you to enter that market, long or short, with cash. I don't want to sound like I only care about the short side, but getting short in crypto is expensive and time consuming and collaterally inefficient because you do need to have coin typically at some point to do that. So with this product being cash settled, you can still enter that short position with cash if that's the way you want to go. And, for something that trades the way crypto trades globally, having that floor at least gives you some protection that you're not going to go to zero. So we think both these things are appealing to people who are new, and we want to continue to roll out products like this. The bounded is trading across Bitcoin, Ether, both versus US dollar, and then we have Bitcoin versus Ether as well in the bounded product. So trying to do the digital to digital, not just digital to fiat.
And speaking of what's popular with the people out there, and obviously the bounded futures are pretty new, so I'm imagining volume's still pretty nascent in them. But overall at ERISX these days, particularly over this past month and change, which I think to even call them volatile is not the tip of the iceberg out there in terms of what we've been seeing out there in the crypto space. So how has volume been in the core products, and what have been the hot things? What have people really been trading most diligently over there at ERISX this past month?
Yeah, volumes have been coming up. And our volume is on par with several other exchanges here in the U.S. I mean, there's a wide range, obviously, in that regard, but our volumes have been coming up, both our peaks and our average dailies, and still with good, tight liquidity. But I'd say by and large, on the spot side, it's been primarily a Bitcoin and Ether story. Obviously, Bitcoin is in the press every day. There's just so much demand as more and more, not just people, but institutions are making their way into this space, whether it was, a month or so ago with the stories around MicroStrategy, a publicly listed company moving some of their treasury into Bitcoin, or, well-known people like Paul Tudor Jones and others talking about Bitcoin, or even last week we saw the report come out from Alliance Bernstein saying, my word's not theirs, but we were wrong. We do think that Bitcoin has a place in some of our private wealth clients' portfolios. I think everywhere you turn, every day, you're seeing more and more traditional participants in markets, not just crypto-only funds, not just hedge funds that are trading esoteric products, where you're seeing more and more mainstream investors and users of investment products look at Bitcoin and say, this is something I need to get exposure to. So we've definitely seen plenty of growth in Bitcoin. Then I think the Ether story is certainly evolving. To some extent, Ether was always sort of trading in similar ways to Bitcoin, not same, similar, but with the ETH2 network rolling out and with them getting enough staked into ETH2 to have the Genesis block print, I think you're really seeing a lot of interest and excitement about what that's going to mean, and hence why we've seen the run-up in Ether over this last month as well too. So that's where we've seen the bulk of the spot activity. And then, as you said, Bound is a new product. Volume's just starting to come up, but it just started trading, and we just publicly announced that product last week. So primarily a Bitcoin and Ether story over here today.
This past month in particular, it's often the case of maybe a little bit too much of a good thing. Obviously, volatility is typically a good thing for the options and derivative space. Need a little bit of volatility. It's the lifeblood, really, of the derivatives markets. You have no vol, you don't really have a lot of interest, a lot of action in the option space. But sometimes a little bit too much vol could be a little bit too much of a good thing. And we certainly have seen in some moments out there over the past month or so, intraday, hourly volatility spiking over 100 and massive swings. The infamous 3,000 plus handle swing in Bitcoin we saw not too long ago out there. So might be starting to get to the point out there where maybe some folks might be getting a little spooked and taking their ball and going home. I'm curious for you guys over there at ERISX, Tom, what have you been seeing? Is it more of, hey, people are starting to get intrigued, maybe the headlines over the race to 20,000 and all of that really starting to drag some mind share from the traditional investing public back into crypto? Or is it perhaps maybe a little bit of the opposite, where it's so volatile right now they're going to sit on the sidelines until it settles down a little bit?
Yeah, I'm gonna say that from our perspective, people that have been in the markets and active for some time are probably behaving in that more normative fashion you described. But the interesting thing we have now, the dynamic that we have now, is there are so many new entrants, and there are so many new entrants of different types, not just retail, but as I had mentioned, you have asset managers, you have pensions, you have endowments, you have fund operators, you have different people coming into the space now. So it's really a unique and exciting time to be in this market, because the normal behavior is perhaps being overshadowed by the fact that there's just new money coming in every day. And it's something you're seeing in the public domain as you hear more and more firms say, hey, we're making an allocation, or we're about to make an allocation. So I think it's going to be one of these things we'll have to look back upon, Mark, when we have more information to really tease it apart, because you do have this new money coming in all the time into the market, coupled with the fact that really it is a truly global asset class. The Bitcoin that we're talking about now and people are trading right now here in the U.S. is the same Bitcoin people are trading 6, 7, 8 hours from now overseas. And it really is a market that doesn't stop, being 24/7. So there's a lot of dynamics about crypto that are very different than other asset classes that we've seen that I think make it hard to definitively state, people are risk on, risk off. What I would say is, two things to note around volatility. One, there was actually a presentation I made back in the summer at a CFTC open meeting about volatility. And what you find is, yes, Bitcoin and Ether may be at the higher end of the volatility scale, but depending when you look at it, there are days when things like Tesla, GE, and Bank of America and GLD are more volatile. And then there just less than a month or so ago, there's another report put out by Van Eck, also indicating where Bitcoin sits on the volatility scale isn't quite as bad as people might make it out to be. I think that there's a lot of other things out there that are more volatile more often. So I think that all points to a maturing market. I think the dynamic of new money coming in that we just talked about is at play there, but it's going to be something we'll have to unwind, I think, through the lens of history.
Speaking of that maturing market, one of the ongoing questions, the ongoing refrains, ever since we launched this show a couple of years ago now, is what's the deal with institutions? Are they interested in this thing? When we launched it, it was kind of in the teeth of the crypto winter. Bitcoin was threatening 3,000 in the wrong direction. It seemed like a lot of people thought institutions were washing their hands of this thing. Fast forward nearly 2 years now, and we're back at or around all-time highs again. And so it remains an ongoing question, what's going on with the institutional space. You kind of just touched on it earlier with some of these funds and this new money coming into the space. But anecdotally, from your conversations with a variety of different players in the space, have you seen a renewed interest from institutions as a result, perhaps, of this most recent upswing and this race back to 20,000? Or is it, like I said earlier, are they still a little bit kind of wait and see? What are you hearing anecdotally out there, Tom?
Well, I actually have a slightly different view on this than most, Mark, because I get asked this question in different forms quite often. When are the institutions coming? When are they coming? And what I typically say is, well, who do you mean by institutions? Because there's so many different flavors of institutions. On the one hand, we have, intermediaries, online brokers that people are used to hearing, names like TradeStation and TD Ameritrade and E-Trade and what have you. That's one group of intermediaries. We have registered investment advisors, another group of intermediaries. You have crypto fund managers that are institutional as well. You have macro managers that may have crypto as part of their macro strategy. They're also institutional. And then you have what I think most people are referring to when they say institutional, which would be fund operators, mutual funds, and what have you. So along that continuum, there's participation from just about everybody. It's that mutual fund side and ETF side that in the U.S. isn't there yet today. But of all those other intermediaries I described, whether it be retail brokers, FCMs, if you're trading futures, investment managers with more macro portfolios, pensions, endowments, they're already here. There's just more of them coming in every day. So, it hasn't been a flood. I would say this has just been a slowly rising tide over this past year. And now it's all coming together because there's so much focus on especially the Bitcoin narrative with respect to everything going on monetary policy-wise here in the U.S. and elsewhere that is getting more and more attention. And now you're seeing more and more names come out loud and say they're in. So I would say, yes, we're seeing more institutions coming in. Important to talk about which type of institutions. And I'd say other than on the mutual fund and ETF side, and I think the ETF debates have been well publicized, you're seeing continued growth from all those other flavors I described.
Well, speaking of those retail intermediaries, when you guys launched, you had a prominent investor, a prominent partnership out there with TD Ameritrade. They were really gung-ho at embracing crypto on behalf of the active retail clientele. Of course, since then, in the intervening couple of years, we've seen TD now has merged, come together over there with Schwab, who hasn't been as out front in terms of commenting and discussing about all things crypto. So I'm curious for you guys, where do you see the future of that retail side of the business? Is it still, are you getting a lot of indications that the Schwab TD conglomerate is still very on board with crypto, or perhaps is it maybe shifting into other realms like Fidelity coming on strong and really embracing it? Where do you see the future of the kind of large retail intermediaries coming here, Tom?
Yeah, well, I think a couple things. One, one of our investors is TradeStation, and certainly TradeStation Crypto is live and out there and active. So they've been able to deliver that product to their customers. With respect to TD, I think if you pull back for a moment and look at, all the events of this crazy year, whether it's TD or E-Trade, there's been a lot of M&A activity in that online brokerage space, right? TD and Charles Schwab, E-Trade and Morgan Stanley. So I think there's been a lot of other things going on for some of those firms other than crypto. And having been at large institutions myself, I can tell you those things take a lot of time and there's a lot of moving parts in order to complete them effectively. So with that, I can tell you that we're really proud to have people like TradeStation on live on our platform, and looking forward to bringing the rest of the folks on. They're still very committed investors, and great to have TD and Fidelity on our side, as it were. But I think you'll continue to see more and more intermediaries offer, whether it's futures or spot, these products because customers are demanding it. And if they don't offer it today, the customers are going to go somewhere else, whether they open up accounts directly at places like ERISX or others, or they go to some of the other places that they can get crypto today, whether it's, obviously we've seen explosive growth with Square and the Cash App, PayPal now entering the market. So I think the number of channels are proliferating, And at some point, you can't be left behind because your customer is going to go where the opportunity is. So I think we'll see more. I just think there's been a lot of 2020 is a year of a lot of things we don't control. So we will have to see who's there next, but we continue to work with all those folks and looking forward to welcoming their customers onto our platform.
That's putting it mildly, the year that we don't control there. You mentioned the future is one of the other areas we saw a lot of interest in, and then it kind of seemed like it dried up a little bit. Was the physically settled side of the crypto space, in particular the futures. A lot of players like BAKKT and others really made a lot of headlines, really drummed up a lot of capital raising around the notion of, hey, we're going to launch these physically settled, physically delivered contract. That's going to be the key to getting the institutions in here. It's going to be key to getting a lot of the funds who want to just be able to trade and get right into the underlying without having to deal with cash settlements and everything. We're going to go right beyond that, launch the physically settled products. And then BAKKT and others launched them, and they haven't really lit the world on fire from an overall volume perspective. You guys clearly have a dog in that race out there in terms of a physically settled contract of your own. I'm curious of your thoughts on that portion of the market, Tom. Do you think maybe people just got a little bit ahead of themselves in terms of the hype on the physically settled side, and there still is a demand, or perhaps maybe there's something else people should be looking at in terms of what's going to drive that next wave of volume on the futures and derivative side?
Yeah, I think it's one of those things where there's a couple ways we could look at it. Succinctly, what I would say is that in the derivative space here in the U.S., developing and launching these products and delivering them in ways that are going to be convenient and profitable for customers to trade is a long and drawn-out process. Whereas outside the U.S., new products are created and launched in a very short period of time because in some instances these markets are operating with very little, if any, regulation at all. So here in the U.S., whether it's ourselves or our competitors, there's rules and we all have to follow them. And those rules take time. And what I'd say is that some of these things were done a bit early. Some of our products included in there, but you have to try and you have to put them out there and see what kind of success you can have with them. In our case, the physically delivered futures are fully funded products. So from a cash and collateral efficiency perspective, those aren't as efficient as some of the offshore alternatives, even though it's a smaller size as compared to, say, CME, which is a cash settled product, but still traded here in the U.S. So I think there's nuances such as that have a bit to do with the success or failure of products such as that. But with that stated, we've come back and launched the bounded products, which are cash settled and I think quite a bit more efficient. And then one of the things we're working on and very excited about and hopeful to launch as early as possible in 2021 is margin on our futures. And then we'll start to have a more traditional market that is appealing to retail in those regards. So, a lot of innovation going on. Not everything's going to be a success, but at least here at ERISX, we take all those as learning experiences and reload with something new and talk to customers and try and build things that people want to trade. Hence our excitement about Bounded and then looking forward to bringing margin products out next year once approved.
Well, Tom, I appreciate you joining us here on the Crypto Hot Seat for our approximately 6-month check-in on all things ERISX. But before we keep going with the show, anything you forgot to mention, maybe you want to leave our audience with a little bit of a hint, a little bit of a tease, like maybe those margin products you just talked about. Now is the time, sir. The floor is yours.
Oh, I appreciate that. Yeah, I'd simply say we have a lot in the pipeline. I think that we've just been methodically turning out new products and platforms. I think that for savvy technical traders, we have a lot to offer with algorithms that can help manage pegging and other sorts of utilities, whether you want to use our GUI or you want to program to our APIs. I think you find a very accessible, clean, professional exchange here for spot and futures. And come on board today, try out the Bounded, and then there'll be a lot more to say after we get approved for margin. So welcome the opportunity to come on your show and certainly talk about ERISX, but talk about what's going on in these markets. It's great. Lots going on here. And certainly there's so much out there to learn and get educated on. You got to start diving in and trading at some point once you're ready. But hopefully what we've talked about this afternoon has been beneficial to your listeners.
I appreciate you coming on. Tom, listeners, if you want to learn more, check them out. ERISX.com is the place to go. Give them a follow on the old Twitters as well at ERISX_digital. Now we have to, of course, keep on rolling with the show. It's time to get on into the Bitcoin Breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do exactly that. We break down what the heck has been happening in the world's leading crypto asset. Of course, we're talking about the big dog, Bitcoin. And actually, this has been a rare net week-on-week, show-to-show at least, quiet week. Intra-week, not so much. But net from our last show to now, not that much. Only about a 20-odd handle move, which is comparatively nothing, a rounding error. You wait half a second, and you get that out there in Bitcoin land. We're at about 19,024 or so at the end of our last show. Coming into this show, we were at close to 1950 or so, 19,050. I think it has rallied a little bit since I was talking to Tom. We're at about 19,116 now. So it has ticked up a little bit, close to almost 100 handles. But still, on the Bitcoin week-on-week movement, not a heck of a lot. Of course, a lot of this data coming at you courtesy of our friends over there at Genesis Volatility. You know where to find them. GenesisVolatility.io, not .com, .io. Kick the tires, light the fires over there on their free trial of their premium offering. It's really cool stuff. I've been playing around with it myself for a while to kind of familiarize myself. And they look at things in some interesting ways that are kind of fun. Like, for example, we've been traditionally talking about 30-day rearward-looking, aka historical volatility, and 30-day forward, aka implied volatility. And those are certainly viable and interesting metrics, but the Genesis guys add a few interesting new wrinkles to that, including their 1-hour volatility, which is fascinating. If you look at that chart, you can see exactly where the 1-hour volatility is and how it's changing, throughout the day and throughout the trading sessions week after week out here. And if you do that, you look at the 1-hour vol out there. Most of this coming from DEREBIT now. We're focusing on the leading platform out there, not doing an aggregate across all the venues. That would be nice, but that's a bit of a challenge out there. So we're focusing on DEREBIT 1-hour volatility here because it still is the leading venue. It peaked at about a 91.25. So getting back to that volatility we talked about earlier there with Tom from ERISX about maybe that's getting spooky land. You get into triple digits there. That's a lot. It's a lot of vol for a major asset class to sustain over time. And that pretty much Bitcoin couldn't sustain it either. Coming into today, actually coming right before the showtime, that 1-hour vol had dropped to not quite 30 points, but pretty close. It got down to about a 66 and change out there. So you're talking about a 25-point drop in the span of that time frame out there. So still very volatile. 66, 67% is an extremely volatile major asset, but not quite at the 100 level that we saw not too long ago. In fact, if you go back a little bit farther, you go all the way back to the 23rd of November, it topped out at 108 out there in terms of hourly vol. So we have seen some pretty aggressive volatility out there in terms of Bitcoin. They also look at the SKEW a little bit differently. Remember, the traditional measure of SKEW is your 25 delta call, your 25 delta put. Put them together, you get your 50 delta risk reversal. Folks at Genesis out there say, look at it a little bit differently. Let's take the whole strip of the 30 delta calls all the way down to the 20 delta calls. And same thing for the puts, 30 delta to the 20 delta. So you get more of a strip of volatility as opposed to just those two strikes. And if you look at that 30-20 SKEW, as they call it, that peaked at about a 27.5 way back on November 30th out there. So that's a pretty big move. Now it has come off, just been annihilated down to about an 11. So a 16.5 point swing on the SKEW front out there, which is fascinating. Overall open interest out there in Bitcoin has also remained strong. It has tilted at that 5 billion windmill, that level a few times. It crossed it ever so briefly a few times over the past couple of weeks, and then we've seen those weekly expirations come off and the OI drops. You look at the OI chart, it's kind of like peaks and troughs, but usually getting higher every time they peak and crossing. Looks like around 5.1, almost 5.2 billion not too long ago, aggregated across most of the major venues. And coming into showtime now, looks like it's around 4.6 billion. So the weeklies have seen some action. Whenever those expire, that OI dips again. Then we rally up again until the next weekly expiration, and then it falls off again. But like I said, every peak is usually subsequently a little bit higher. We're seeing across the venues now, DEREBIT still in charge, about 4.2 billion. Actually, no, I take it back. DEREBIT was the max is 4.2 billion. They're right now about 3.7 billion. And then CME about 239 million. Again, these are all notional now. And then Huobi, kind of light, 3.5 million. LedgerX, 99 million. And OKEX, 236 million. BAKKT.com coming on strong as well at 294 million. So BAKKT.com actually elbowing its way into second place. And a bit of a tie for third between CME and OKEX. And then bringing up number 4 is LedgerX. And then they all kind of fall off from there. In terms of the net OI out there, Bitcoin usually call heavy, and that remains the case right now. It's about 120,000 contracts on the calls versus a little less than 80,000 on the puts. Looks like about 75,000 or so on the put side. So still calls leading the dance. So we talked about it before with these guys. As you look at the different maturities, longer term, you add in all of the months, which is what this is doing, it's going to be call heavy. Nearer term, in the front month and in the weeklies, things can get a little bit crazier as Bitcoin ebbs and flows. Speaking of getting crazy, it wasn't the craziest of weeks from an overall volume perspective. Remember, coming off the heels of just some unprecedented weeks in terms of volume as we were racing towards that all-time high again, then retreating away from it, and 3,000 point swings intraday and all the fun stuff that has been making headlines day in, day out. Still some impressive paper, particularly at the beginning of the week. Then it kind of quieted out. We saw on the first last week, saw 592 million worth of notional going up over there on DEREBIT. So a pretty active day. It was on Tuesday. And then on Wednesday, we saw 572 million. The rest of the week, a lot quieter, 400 million or below. That's decent paper, but quite a bit below what we've seen recently. Like on the 26th of November, 750 million. We saw 699 million on the 17th, 762 million on the 20th. So nothing quite approaching those levels this past week, but still overall a pretty active week. Again, the folks at Genesis like breaking things down hour by hour, which is certainly a fascinating way to look at the markets. And if you do that by OI, you see that open interest peaked on DEREBIT on the 27th of November at 225,000 contracts for Bitcoin. And then it came off again as the expirations come and go. And then we saw it rally again to 217,000 on the 4th of December. And then right now it's come off again with some of the weeklies, and now it's at about 192,000. So still strong, still firm, but a wee bit below that recent spike out there. In terms of people who are doing out there right now, today, coming into Showtime, I like to break it down. You can break it down a couple different ways on the Genesis platform. You can add an overall premium, which is how a lot of the crypto market likes to do. I like to look at contracts, see what's actually trading out there. So if you break it down that way, it's not quite an even 25% across the board market, but it's pretty close. It looks like about a third of the volume out there is people buying puts, particularly today out there in the markets. And then looks like about not quite, a little bit less than a quarter each for the rest here of selling calls, buying calls, and of course selling puts out there. So interesting breakdown, but today looks like a little bit of a put heavy day on the premium buying side, which again, not hard to fault them when we're seeing a little bit of a retreat from those all-time highs out there not too long ago. In fact, one of the bigger trades saw there today in terms of dollar amounts and notional was some pretty beefy September 32,000 puts. So yeah, those are still pretty far in the money puts there, listeners. So those, in terms of how many dollars were involved in selling, someone sold those things. That's a pretty beefy contract. That's the kind of stuff that really plays with the notional value things a little bit. So it's obviously the heavy notional value trade, yet overall it's kind of a strange trade as well. So it's kind of hard to read a lot into that, and that kind of thing games the notional numbers, which is why I don't get too excited about overall notional. Let's see where the action is from an expiration and a month perspective. Like I said, crypto likes a quarterly. DEES, regular monthly DEES, still leading the roost at about 70,000, pretty close to it in terms of net OI. Number 2 is Jan with looks like about 45,000 actually contracts here. Then we got close to a tie between the weekly DEES expiring on the 11th and March. Again, people like a quarterly out there. Both of them close to 30,000, about 25 to 27,000 each. Then it kind of falls off again for the weekly. So folks still liking themselves from quarterly, but Jan also fighting its way there into the front. In terms of what's fighting away on the strike front, it's not even a contest. It's still that 36,000 strike. Those kind of crazy calls we talked about in Jan a few weeks ago here on the show are still far and away the largest open interest strike out here. In fact, nothing else comes close. They're over 20,000 open on that strike. The next closest is the 16,000 strike, and that has a little bit shy of 15,000 contracts open there. So a huge difference between 16,000 and 36,000. Also, looking at the chart, it's just kind of fascinating because we had threatened that 20,000 level and then retreated from it around 19,000 right now. And it still is 16,000, not some of these other strikes that are a little bit closer, 17 or 18 or dare I say 19,000. And certainly 20,000 has a much more, round, even mind share level. And that one's only at looks like about 13,000 and change, maybe 14,000. So not quite the strikes you might think dominating the chart out there. Even if you take away the ridiculous ones of 36,000, and then there were some other ones that were nuts as well. I think there was around a 60,000 strike or something. There's a lot of outlandish strikes to the upside out there, listeners. In terms of Bitcoin, what was the action out there today? CME Bitcoin options, I should say. This week, not a lot going on in CME Bitcoin options. The biggest day looks like was Wednesday, about 159 contracts. Remember, that's a 5x contract, so you're talking a little bit more in terms of overall coins changing hands out there, but still not a lot of paper, about 100 on Thursday, and Tuesday and Monday about 60 odd, and not a lot to speak of today or Friday. Futures, similar story. Remember the week before we saw a pretty heavy week out there in CME Bitcoin futures, 25,000 plus contracts days, 16,000 contract days. Not a lot of those this past week. Today, about 5,000 contracts coming into showtime. Friday, Thursday, and Wednesday last week were all about 8,000 contracts. Tuesday and Monday were the heavier days with about 15,000 each, but the rest of the week kind of light. Same deal for BAKKT, our old friend, the BAKKT volume bot. Yet again, not a lot of paper out there in all things BAKKT land. So I think maybe we'll table the BAKKT updates here for a little bit until we get some more volume going up down there. It's the total volume about 72 million worth of notional, which is down 56% on this most recent summary. So I'd love to get a chance to chat with those folks and see what the heck is going on out there in the world of BAKKT. They certainly have raised a ton of capital, not a lot of that materializing into volume. As we keep rolling on into our next segment, it is time to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe. This is indeed the portion of the program where we break down everything going on the rest of the crypto markets, the top 10, including the big dog, Bitcoin out there. Number 10, Binance Coin at about, $4.25 billion. Number 9, Polkadot, $4.5 billion. Number 8, Cardano, $4.75 billion. Let me jump over 5 here for number 7. Chainlink. Number 6, Bitcoin Cash, $5.25 billion. Number 5, Litecoin, $5.5 billion. Number 4, Tether, $19.7 billion. Number 3, our old friend XRP, still hovering on that 60-cent level, but looking good to the tune of $27.25 billion, reclaiming its number 3 spot that had surrendered to Tether for a while there. Number 2, ETH, $66 billion. Number 1 with the bullet, the big dog, Bitcoin at about $352 billion. Wasn't our guest last week talking about the 1 trillion market cap level? Not quite there yet this week, at least for Bitcoin, but $352 billion. Nothing to sneeze at out there. Let's go on out to the number 2 crypto options market out there right now. Talking ETH. Not exactly a robust week for the ETH bulls as well, but you got to give some back when you get all these huge upside moves, listeners. That's pretty much what we saw this week. ETH at the end of our show was around 603. Last show this week come into Showtime was at about 588. Puts it down a little over 14 handles from this time last week. It was taking a bit of a retreat after a long and protracted rally out there. Again, let's go back out to the Genesis folks, look at their 1 hour stats, just because it's kind of fun. Let's see what's going on from a 1 hour vol perspective out here in ETH land. It peaked at 107 out there on the 23rd of November. So that's a lot of juice, 107% volatility, listeners. It hit 103 again on the 1st, so it stayed around that 100 level for a little while. It has now since come off it pretty aggressively. It's down to about 77.5 coming into showtime. So still very volatile, but nowhere near the 107 levels it hit not too long ago. Same deal with that 1 hour 30-20 skew. It hit about a 30 back on December 1st. That was the peak, so that was some severe skew action. Now a lot of that has vanished. We're down to a little bit shy of 14, about 13.75 coming into showtime. Looking at the OI, what people are up to out there, it's much less biased in ETH than it is in Bitcoin. Bitcoin is mostly calls. ETH is pretty close. It looks like about not quite 700,000, about 650-odd thousand here in terms of net contracts, 638,000 actually on the calls, and the puts are not that far behind. It's like a little bit shy of 600K, about 580,000 or so out there. So much closer in terms of open interest puts to calls out there in ETH. Maybe showing a little bit more balanced opinion out there, whereas longer term in Bitcoin, it seems like it's all bulls all the time. OI breaking it down by hour. Again, another interesting metric. It peaked again in terms of contracts out there, 1.4 million on the 27th of November. Got close to that again on the 4th of December, 1.35 million. And then come into showtime, it had come off a bit, about 1.2 million contracts open out there. Overall, volume-wise on ETH, similar story to Bitcoin. Not a rock'em sock'em robots week, but a robust week. We saw last week on the 1st 100 million going up, so that was a pretty active day. That pretty much exceeds just about everything else we've seen out there recently. The highest we saw below that was 99 million on the previous Monday. But outside of that, not a lot going on every other day this week, 41 million worth of notional or less. So like Bitcoin, week started off strong, then it kind of fell off by there. Let's look at where the folks are playing in terms of the expiration cycle for ETH options. The quarterlies, the end of December contract, still the big dog, closing in on 600,000 contracts out there, and then not much else even close. The next closest is March, looks like about 225,000 contracts, and then it all kind of falls off from there. You've got the weeklies and Dece coming in at a little bit shy of 10,000, December 11th expiration, and then you have June around a similar level. So already as much, if not more, open in June than there is in the weeklies in December. So interesting stuff. It still is pretty much the quarterlies dominating the tape out there in ETH land, even more so than in Bitcoin in terms of strikes, where the action is. Like I said, coming into showtime, we had ETH at about a 588 or so. Let's see how we're looking on the open interest from a strike perspective out here. Still the big dog is the 400 strike. That seems to be where the lion's share of the open interest is. It's about 75,000 in terms of contracts out there. And then it kind of falls off a bit. We've actually got like about the 350 strike at around 70,000 or close to it. And then got to go way the heck up, all the way up to looks like about the 1100 or 1120, right around that range. Listen, it's kind of hard to tell on the legend of this graph at about 55,000 contracts open. So analogous to Bitcoin there in that there's some absurd upside strikes at play as well. Then the stuff that's more relevant to right now, you know, the 500s, the 600s, those things are much less OI, which is kind of fascinating, at around the 40,000 contract level, or a little bit above, a little bit below, but certainly well below the 400 level out there in ETH, which is kind of fascinating. Let's round out our trip through the altcoin universe. Our old friend Ripple down a little bit this week, actually, but still looking pretty lofty, off nearly 4 cents from our last show, but it's been on the rampage the last couple of weeks. So again, it's got to give some back a little bit out there. Bitcoin Cash down as well, down almost 31 handles from our last show. And our old friend out there, Bitcoin SV, having a bit of a quiet week, down not quite 3 handles, about 291 from last show. All right, that music means that's going to do it for this episode of the Crypto Rundown. I think our guest there, good old Tom from ERISX. Fascinating stuff. They have the bounded contracts for everybody out there who's maybe a little bit concerned, and it's certainly a reasonable concern about shorting Bitcoin. That may be the contract for you. They have the physically settled contracts. A lot of interesting things going on over there at ERISX. Check them out over there. ERISX.com is the place to go. And while you're checking things out online, you know where to go to learn more about these stats and all the data we're talking about here. Genesis Volatility. We can even shorter. Forget the GenesisVol.io. Just go to GVOL. GVOL.io. That's a place for institutional grade options analytics. Also give them a follow over there on the old Twitter machine at GenesisVol. No underscores, no spaces, just at GenesisVol. And on behalf of myself and Tom and our friends over there at Genesis, I want to thank all of you out there for downloading, streaming, subscribing, for listening live. Remember, you like the show, it's literally kind of the only game in town, so recommend it to your friends. Keep the word out there. We love to see new listeners, new earlobes joining us week after week. Remember, a lot more hitting the network than just the Crypto Rundown. There's a couple of shows pretty much every day out there. So if you like this show, maybe you're a little bit new to the world of options, don't worry. Got you covered. Got Options Bootcamp, Options Playbook Radio. You get a little bit more advanced. You can get into the option block and volatility views. On the asset management front, we got the advisors option. You like futures and commodities. You got TWIFO, which overlays with this show quite a bit. We do a little bit of crypto analysis over there as well, at least on the CME product. So a lot of different shows for you guys to sink your teeth into here on the program. So we'll enjoy seeing you throughout the rest of the week on those programs, and then back again here next Monday for another episode of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or Search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.